Okay, all right, we'll get started. I'm sure we'll get some people joining us as we go as well. But look, hello everyone. Thank you so much for joining our latest Danos webinar we have entitled the EU UK Crypto Regulation and Changes Market Expectations. So yeah, firstly, just some house rules. Please can we ask everyone to stay on mute throughout, just so we don't distract any of our speakers. And if you have any questions at any point, please do use the chat facility on Zoom. And we will be having a Q&A at the end, so we'll ask our speakers at the end as many questions as we can, just depending on obviously how we're doing for time. If you'd like to leave your cameras on, it's fantastic to see you all, but obviously appreciate if that's not possible too. Now, on to the webinar. So let's get started. Thank you everyone for logging in today. Let me first introduce you to the Danos Group, if you're not aware of us. The Danos Group is a specialised recruiter across financial services, focusing on compliance, financial crime, risk, legal and ESG. We have 4 global offices: London, which covers across Europe, New York, Hong Kong and Singapore. I joined the business myself just over 4 years ago, and I lead our interim compliance and financial crime offering, Danos Consulting, where we can help on any shorter-term assignments, whether that be individual or potentially even more of a project team. My colleague Nicole Overend is also here helping host today's webinar, and Nicole focuses on the permanent sector here at Danos, with a more specific focus on the crypto and fintech sector too. Now on to our first speaker. We've got 3 fantastic speakers for you today. Please can I introduce you to Shelly Shafter-Khan, who's been a Chief Compliance Officer at a number of well-known fintech and crypto organisations. I believe is very well known in this space as well. So Shelly, over to you.
Thank you so much. Yeah, hi, good to meet you all. So I'm currently interiming for a payments institution in gathering their license, and I'm going to be taking you through today on 3 topics which in themselves could be like full 3-hour webinars, but we're going to hit them off really quick. And I've recently come back from Strasbourg on training the Council of Europe on anti-money laundering and counter-terrorism financing, covering across not just NewFi, but also the intersection of TradFi and NewFi, and where that is bringing vulnerabilities around in what were established, well understood, well embedded types of regimes, and the challenges that come across for capacity building from the policy making level right down to the enforcement level, and the education challenges that come along with that. So there is a recognition from the very highest of policymakers and research groups that the systems and controls that are expected to be in place for compliance related to TradFi don't always fit in this brave new world. And that segs beautifully into the next topic, which is recognizing and evaluating the advantages and disadvantages of automation in compliance. So the greatest advantage is we will never have to do dull, busy work again. But the greatest disadvantage is we will never have to do dull, busy work again, because, you know, how did we all get here? How did we learn about what it is we're doing? Is by routine and practicing and building upon our skill sets layer by layer. And what we're seeing in compliance teams now is you don't say to your compliance associates, go read this regulation and come back, tell me what you think. They go to ChatGPT and ask ChatGPT, explain this regulation to me in a style that a 7-year-old would understand. And then they synthesize that and say, okay, now if this is my role on this sort of team, what does this regulation mean to me? What sorts of controls can I build out of the instruction I'm getting from these principles, with some context into how to practice that? So I'm seeing the incredible benefits of automation are also around what is NewFi and payments institutions, leaner institutions, digital banks, where those old structures of paying a lot of people to do a lot of manual tasks, that's being eliminated. And it's actually so exciting, because thinking about the jobs that are going to be around in 5 years from now in this space, I don't think they've even got titles yet, because that blend of software engineer, remember, you won't have to code, that can be done for you now through language learning models. The combination with that of a product manager who understands the customer experience and the customer journey, not just from the regulatory perspective of duties, but from what makes for a great and compelling customer duty, along with a compliance professional, which again, it's not just about money laundering. It's what it used to be in payments and what it has been to a great extent in crypto up until, now we have the financial promotions regime. But realistically, all of that is going to be catching up and looking, feeling, smelling, behaving like full service bank regulation, with very few exceptions carved out. So the sorts of governance structures and controls that we're seeing being asked for in applications, for example, for an EMI, even that, I mean, it used to be a pretty slim application process, even up until 2 years ago. And now you have to have everything in order that you would expect to have in order pretty much for a full banking application, aside from the capitalization details. So that's just a word of warning there, that those barriers to entry are forever being raised, and they're being raised for sometimes good reason, other times defensive reason, to slow down the pace of applications, to aim to increase the quality of applications. But my biggest hope for 2023 is that not just the compliance community on our side of the fence gets with the program and works hard on making those skills that will mean we have sustainable careers, to make those skills sharper, more relevant, less scary to acquire, being leaders in the space. I would love to see the same efforts going in by our auditors, our supervisors, our enforcement agencies, and our law enforcement partners. But I'm still getting the impression, ooh, this is all a bit scary, it's all a bit new. And so we may be waiting for catch up on that side. So go out there, fight the brave fight, and let's bring compliance into the 21st century. Yeah, back over to you, Bradley.
Thank you so much for that, Shirley. That was really interesting insights and information to hear from you. Now on to our second speaker. I'm delighted to invite you all to listen to Sinchan Banerjee, who is currently the Head of Digital Assets at KPMG. Over to you, Sinchan.
Hi, good morning all, and thanks, Nicole, for the introduction. I will probably take about 10 minutes or so and suggest I cover a couple of topics there. I'll share a bit of the macro trends that I'm seeing in the market, bit of the market color and perspective that I'm picking up through my own travels and discussions with colleagues, peers, and clients in the market. And I'll give you a bit of a summary and bird's eye view of the European market in crypto assets, or the MiCA regulation that's coming in, give you a view of the summary, the timeline, some of the key considerations that you may need to bear in mind over the next year plus as you go through the journey. It's a couple of topics. Again, just like Shirley, I could probably spend a few hours talking about these, but I'll try to keep this in a very condensed 10-minute view, and happy to take questions right at the end. So I guess on the macro trends, clearly, common view is we are probably still in the middle of what we may call as a crypto winter or the bear market, or whatever terminology you may want to use. But I am clearly seeing some green shoots of recovery in the broader digital asset space, as I may call it. And what I say digital assets, I mean both the crypto markets in itself, but also the application of the distributed ledger technology and how that's impacting the financial markets effectively. There are clearly some green shoots I'm seeing there. And I think there are a few trends that are coming out. First and foremost, I see is some of the regulatory clarity and discussions that's happening in the market. And I think all of you are probably aware that there are at least 20 plus restrictions globally, which have got some semblance of a regulatory clarity. or are in very advanced discussions and consultations to bring that clarity into the ecosystem. And what it does is, I think it promotes innovation, it creates stability, and it sets the guardrails and common rules for operation across the market, and that helps everyone in there. So that's fantastic to see. The other one I'm seeing there is a strong client demand, actually, that's coming into the discussions. And interestingly, a lot of the demand I am seeing is coming in from the institutional side as well. Some of that is coming in as exposure to the underlying crypto assets, and that varies on jurisdictions, whether you can offer that or not clearly. Some of that is coming through to get an exposure to the assets through a more traditional structure, like an ETF on ETP, as an example. And again, we all have seen recent news and examples and live products in the public space, which is fantastic to see. But we are also seeing a very strong interest in the private assets market as well, which then bleeds into the application of the DLT into bring those assets into the ecosystem and almost open up a new era of investors joining that, which is great to see. And all that is driving that recovery and innovation that I alluded to. The third thing that I'm seeing there is a lot around the funding structures and the funding models, actually. Clearly, based on public research, we all can see that some of the funding has slowed down given the macroeconomic conditions in the market. But again, crypto projects which have got a very strong business case around it, a very clear track record and progression, and almost operating in jurisdictions with a level of regulatory clarity and guardrails, it's getting well funded. And we are seeing that through our discussion. And that's fantastic to see that the investment is flowing into the right areas that we want them to flow effectively in there. The fourth one, I think where I'm seeing there is a lot of cross-industry collaboration. And what I mean by that is, I think the innovation model in the industry is adapting, it's changing, and it's changing for the good around that. So a lot of collaboration happening between the TradFi world and the NewFi and the crypto native world effectively. And they're coming together in use cases and saying, how do we actually partner, collaborate, and lock heads together to solve some real use cases and drive innovation in the market? That has got a real paradigm shift over the last 18, 24 months or so. Rather than trying to do things in isolation, it's a real collaboration I'm seeing in the market, and that's fantastic. And when you sort of lay on everything that I just said earlier, what is driving is a product and service innovation. And that's happening in your underlying crypto assets. It's happening in traditional assets. It's happening in new assets and bringing in new investors into existing asset classes as well. It's reducing barriers to entry. It's promoting consumer choice. It's sort of improving the protection of consumers as well in the market. It's promoting transparency, and that's all fantastic for the broader digital assets ecosystem. So clearly, I am very optimistic, very confident as we step through the rest of 23 and into 24 and beyond, that we are clearly seeing some great trends, macro trends in the market for recovery around that. So that's all great. Now, if I cast my mind into MiCA, because that probably has been a hot topic for the last few months in many of our radars. So I'll start with the basics and jump into a little bit more detail. So marketing crypto assets is effectively a European Commission regulatory framework to deliver a few objectives. And I think you may already know this thing, it's a part of the broader digital finance package from the Commission to drive innovation in the block around it. And if you start to think of some of the objectives and the scope and what it's doing, clearly it's designed to promote innovation in the sector. It's designed to protect investors who are entering this market and staying there. It is designed to promote stability of the crypto assets market. And if you sort of think about the combined impact of all of these, it effectively improves access for investors to the market, which is all we want that. So it's designed for the right objectives. And some of us who may have lived through regulations such as MiFID, you will start to feel that it's very similar in terms of some of the objectives. Clearly, it's designed for the crypto assets market around it, which is fantastic. I think in terms of the product scope, it talks about the crypto assets in itself. Around that, it talks about an asset reference token, which by some extension we might be referring to stable coins depending on the underlying asset. It talks about e-money tokens, which again we have in the UK through e-money registered institutions or credit institutions as well. So some of the concepts are pretty similar to both UK and the European Commission rules coming out as well. I suppose in terms of activity, it's quite broad by design. So quite frankly speaking, it starts right at the issuance of the asset itself. It talks about the execution, the trading, the custody, the portfolio management, the advisory size. It's quite comprehensive, I must say, in the way it is designed. And I think from a timeline perspective, clearly, as you know, we are going through a consultation phase at the moment. First branch has come out. Second ones are coming through in a short order through later this year, and third one early next year. Go live in June 2024 for the first wave around asset reference tokens and e-money tokens, and then December 24 for the broader set that's effectively going through. So that's sort of where we are. So what are some of the key considerations for the MiCA and firms which are caught by that? Now, the MiCA does have some extraterritorial considerations here. Clearly, if you are operating in the bloc and in the European Economic Area, and you're offering crypto asset products and or services to clients, you are caught. That's probably a no-brainer. But if you're outside the area and you are servicing EEA clients, you will be caught as well. So there is a clear extraterritorial consideration that firms need to have. And against firms which have worked through historic regulations from the region would be familiar with some of the extraterritorial consideration. It tends to be the case as well in other regulations. So that's that. Now, in terms of the things to consider, clearly broad brush, there is definitely a registration requirement, which we all have seen a variation of that through the AML CTF version that currently exists. Clearly, there is a requirement around white papers. It depends on the type of service and product you're offering. There are nuances around that. There is a strong focus on governance and control and transparency management, and very rightfully so, making sure that you got fit and proper management to drive the business. There's a huge focus on compliance requirements, and as Shelley was mentioning earlier, clearly some of the automation agenda absolutely helps that. There's a large focus on prudential requirements to make sure that the business is fit and proper and has got the proper guardrails around it. So as an example, if any service provider is deemed as systemic, then there will be additional prudential requirements such as capital ones. Again, the concept is quite familiar to most of us in the traditional market space, but those have been adopted for this particular ecosystem as well. There are clearly guardrails to prevent any market abuse. There are reporting requirements around it. So it's starting to look and feel very similar to some of the obligations we have seen in the traditional market space, and ultimately supports the objectives that MiCA has effectively. So I think all in all, a great piece of regulatory framework that has come out, probably one of the most leading in the world based on some of the discussions I have been having. We need to keep a close eye watch on the consultations that's coming out. I would urge industry participants to participate through this consultation process. It's super helpful, making sure that we end up with a regulatory framework which is fit for purpose. It drives the innovation, but equally protects investors and ultimately helps the whole ecosystem. So I'm really optimistic again about MiCA and the future regulatory journey, at least close to home. So I guess before I wrap up, really some great macro trends, green shoots of recovery that I'm seeing in the market. I'm very optimistic about the regulatory direction of travel and look forward to engaging with colleagues and partners in the ecosystem to drive the growth of this industry further. So that's all from me, and Nicole, back to you.
Sin-Chan, thank you so much. Lots of obviously fantastic regulatory takeaways for everyone there as well. Just to remind everyone, we've got the chat facility obviously on Zoom here. If you have any questions for any of the speakers today, please feel free to share them. We should have a little bit of time at the end to ask some questions to them as well, so please feel free to pop them through on there. But yeah, no, thank you so much, Sin-Chan. Now on to the third and final speaker. Please can I introduce you all to Dee Murphy, formerly International Head of AML MLRO at Coinbase, who's also recently joined in a senior capacity at Bitpanda. So, Dee, over to you.
Thanks very much for the introduction, Bradley, and also thanks very much to Shelley and to Sin-Chan for their insights already. To provide a quick introduction to my experience and background, as Bradley says, I am now the VP of Compliance and AML for International in Bitpanda. And for those of you who don't know, Bitpanda is a crypto asset provider and a MiFID licensed entity operating primarily out of Austria. And so it also operates with licenses across a number of other jurisdictions in Europe. And so before that, I was in Coinbase for about 2 years as the International Head of Financial Crime Compliance. And in Coinbase, international basically means any jurisdictions outside of the US. So I was able to get a great insight into APAC and, of course, other jurisdictions across Europe there. I started my career in traditional finance, though, so hopefully I was able to bring a lot of the expertise and opinions from that into the fintech space that I now find myself in. So to delve into the topic at hand, in the UK, crypto assets currently operate in still a largely unregulated space, as we all know. And while crypto asset firms operating in the UK are required to register with the FCA under the money laundering regulations, up to now, essentially, businesses operating in this space have had the freedom to promote these crypto assets as they've seen fit. However, as I'm sure many of the people on this call will now know, the financial promotion rules for crypto assets are set to change all of this. In June 2023, so last month, the FCA published its policy statement on the financial promotion rules for crypto assets. And this sets out the FCA's final position and its near final handbook rules on how the financial promotions regime will apply to crypto asset businesses. In addition to this, on the 4th of July, the FCA published a letter that was addressed to crypto asset firms, warning them that they must get ready for those financial promotion rules and the regime by the 8th of October. So not a huge amount of time, really, given some of the asks in this. So let's attempt to summarize some of the key points here. Mainly, which firms are in scope? So who is in scope for this? Well, it's important to know what the FCA has said in its letter. And it has noted that it expects most, if not all, crypto asset firms with UK retail customers to be within scope of the regime. So note that it doesn't say UK registered VASPs. Crucially, for any firms that are outside of the UK, the FCA has noted that financial promotions communicated from outside the UK, but which are capable of having an effect in the UK, are within scope of their regime, which obviously causes some difficulties. And then we go down to the line of what is a financial promotion? Well, the definition of this actually is really quite broad. And the FCA notes that a wide range of communications made by a firm are capable of being considered a financial promotion. And that includes websites, it includes mobile apps, social media posts, and online advertising, to name a few. In the world of crypto assets, promotions are quite common, and they don't necessarily align with what we would expect an advertisement or promotion to be like. So traditional methods such as billboards or TV adverts. So, for example, firms have even engaged in celebrity influencers to invest in crypto. Many of the attendees in this call might recall Kim Kardashian and a settlement suit with the SEC in October 2022, where she had to pay out $1.26 million to settle that case, where she was accused of promoting crypto assets without disclosing her compensation. And that included a penalty of about $1 million because she'd been paid around $250,000 to promote the token in the first place. So we're talking, serious considerations by regulators globally. Anything that promotes an investment and contains a mechanism which enables consumers to place their money in that investment is likely to constitute what the FCA note to be a direct offer of financial promotion, or DOFP. And the FCA even gave an example of this as being a promotion containing a buy now button, enabling customer to invest. So as you can see, a buy now button, I traditionally wouldn't consider that to be a promotion or an advertisement, but the FCA does. So that's important to consider. So the categorization for financial promotion purposes. So under the new rules, crypto assets are now categorized as restricted mass market investments. And that puts them in the same category of bonds or shares in private limited companies, for example. They can be marketed to UK consumers, but subject to certain restrictions, which we'll go through now. And of course, any promotions will still fall under the remit that they must be fair, clear, and not misleading. So some of the restrictions proposed include new clear risk warnings, and the wording is specified by the FCA, banning incentives to invest, and this is a big one for a lot of crypto firms, positive friction, client categorization requirements, and appropriateness assessments. So the next question really I would ask is, how can crypto assets be promoted under the new rules? Well, at the moment there are 4 routes. The financial promotion can be communicated by an FCA authorised person. It can be made by an unauthorised person, but approved by an authorised person. It can be made pursuant to an existing exemption in the financial promotion orders. So I'll leave you all to look at those yourselves, because obviously they're quite complex. And then the last one is a new exemption, which is they can be communicated by crypto asset businesses that are registered with the FCA under the money laundering regulations. It's important to note under this one that this exemption only allows businesses to communicate their own financial promotions, so they can't actually approve those promotions for other firms. And briefly, what are the new restrictions? Well, a big one is a new cooling off period and a personalised risk warning. So there now will be a 24-hour cooling off period, which will apply to first-time customers before the customer can receive the direct offer financial promotion. And during the cooling off period, firms must provide the customer with personalised risk warning. However, it should be noted that firms can allow prospective customers to proceed with other parts of the customer journey, such as customer due diligence and KYC, client categorization, and the appropriateness assessment during that cooling off period. At the end of the cooling off period, though, the customer will then need consent to proceed with the investments. And then removing incentive to invest is another big thing, because many of us will have seen refer a friend schemes. The FCA has confirmed that the new rules will ban firms from offering any monetary or non-monetary benefits with which incentivize investment activities. So that refers to like bonuses, refer a friend schemes, as I say, or new journal rewards. So ultimately, what does all this mean for crypto firms? Well, there's a lot to do before the 8th of October, crucially. Firms operating in the UK will need to fully familiarise themselves with the new rules and just carefully consider how this aligns with their business strategy and their business plan. The FCA's letter notes that unregulated or unauthorised firms marketing to UK consumers, so anyone also outside of the UK, need to consider which of the 4 routes they will use to make their financial promotions and how they'll meet the requirements of that route. They also need to consider how they will deal with UK customers if they're unable to communicate the financial promotions to them. And it also needs to communicate any changes to the services that they will offer to UK consumers. And also, in the event that the firm decides no longer to provide services, they need to, the FCA expects them to ultimately to have an orderly wind down plan and minimise any consumer impact. It's obviously a hot topic for the FCA at the moment, because on Monday this week, I just want to note that the FCA published a new consultation paper in relation to guidance on how financial promotion requirements apply to social media. And it's so up to date that it even refers to Threads, which I think was launched about 2 weeks ago as an apparent rival to Twitter by MiCA. So responses on that are due by the 11th of September. So I urge you, if you're interested, to go have a look at the FCA website and that consultation paper. You'll be pleased to note that that one is under 30 pages, as opposed to the policy statement on financial promotions, which is almost 100 pages. So plenty of reading for everyone on the call. Crucially, before I go, just a couple of minutes. So the FCA's policy statement on financial promotions notes that the FCA expects to see more firms applying for registration as a result of the financial promotions regime. So ultimately, I think this is going to act as a catalyst, and the FCA agrees for more people having to register under the money laundering regulations with the FCA. But data on the FCA's website indicates that only a very small number of firms are making their way onto the FCA's register. As at the 1st of July, only 14% of firms that applied to be registered with the FCA under the MLRs succeeded. That's 43 of 303 applications received. So the remaining applications were either rejected, withdrawn, or refused, the majority of which were actually withdrawn. And the FCA has made some notes on the website about the fact that they've rejected submissions that didn't include key components necessary for them to carry out an investment, or there was just poor quality of some of the components. So in order to assist with firms applying for the FCA, they have added plenty of information to the website in order to look at the quality of applications, and they've given firms guidance on what they need to do at all stages of the application. So I urge anyone considering to have a look at that, as there's lots of useful information there. But I'd like to just draw attention to just a few of the items on this that I think should be considered when applying for registration. And ultimately, I think the key point for me is that out-of-the-box cookie-cutter policies and procedures are just not going to be sufficient, and that policies and procedures must align with your business plan and must consider proposed business. So, for example, if your firm intends on growing and it has that in its business plan, ultimately, the framework has to be scalable. So a few questions to consider are, do you have adequate employees, and is your framework scalable in the event of a crypto bull run? How will you scale if you need to? What mechanisms are in place for reporting management information to senior management and the board? Where you have committees or working groups that are responsible for discussing key compliance matters and reviewing key risk indicators and other management information, what kind of governance is in place? I know Shelley touched on this earlier, but do you have terms of reference for such committees? Do you have a proper structure and framework? What kind of monitoring takes place of financial crimes compliance controls that have been adopted by your firm? Are there quality assurance procedures in place? And where items have been outsourced, either internally or externally, what controls are in place to oversee those and ensure that parties are meeting the requirements of the money laundering regulations? I'll just summarise by saying that I think there's a perception sometimes that registering under the money laundering regulations is all about KYC. And KYC is obviously very important, but my argument would be that it's actually just the tip of the iceberg, and there's a lot underneath the surface that you need to look at. And arguably, a lot of this is as important and even more so. Fintech firms often focus on the tech part, and obviously our product and engineering teams would love us to focus on the tech part. But my key message would be, and Shelley and Sinchan have both touched on this, if firms want to operate in a regulated financial environment, they have to consider where they need to align with TradFis and do things, unfortunately, in the old-fashioned way. Now, by all means, firms and fintech firms and indeed crypto firms should continue to think outside the box, should innovate, should challenge the status quo, should do all the wonderful things using AI and bots, etc. But firms need to do this while establishing a robust framework in relation to financial crimes compliance to be able to exist in the market and be competitive in the long term, because ultimately the price for non-compliance is too high. I'm conscious I'm out of time, so I'll hand it back to Danos for some Q&A, but I'd love to hear any questions from anyone on the topic. Thank you.
Dee, that was absolutely fantastic. Thank you. Really, really, again, so much amazing stuff to take away from there. There's obviously so much to keep up with what's being released from the FCA at the moment. So hopefully that's also created a few questions from some of our audience here today. But we'll kick off, and thank you for the questions in the chat. And Richard Farr, and I'll put this out to all three speakers and see maybe who would like to see if they can help answer this one. But Richard Farr has said in the chat today, how does a firm demonstrate how it will follow an approved person sign-off route when the process of how to apply for the approval is currently unclear? Is that a question I can throw to one of the speakers? Would Dee, Shirley, or Sinchan like to maybe help answer on that?
Maybe can I just check, Bradley, is that specific to the financial promotion rules and receiving approval under that?
I can only read what Richard's put through so far, so perhaps maybe let's say it is in relation to the financial promotion group, but I'll let you maybe answer the best way you see fit, if that's okay.
I'm happy to clarify if you want.
Sure, yeah, Richard, go for it.
Yeah, so thank you, Dee, it was really informative. They've got 4 routes, and let's say there's a firm that doesn't, it's not an authorised firm, but would like another authorised firm to actually do the sign-off for them. But that authorised firm, it's unclear how that authorised firm is actually going to get the Section 21 approval to actually be able to sign off the firm. So it's a bit of a chicken and egg.
Yeah.
So the maybe it's not in the UK, but is serving UK customers. They don't want to go on the register. Well, they don't know how to apply for Section 21 either. But how can they find a firm that's willing to do that when existing authorised firms, again, it's not unclear. I don't think it's been published yet of how to actually apply for that or that new limited permission to be able to sign off an unregulated firm.
It's an excellent question. I don't, unfortunately, have a great answer on it, because I think you're absolutely right. It's unclear at the moment. I saw, and I was reading around ultimately the gateway, which is what you're talking about, is the gateway under the Section 21. of the FSMA, which allows this. And the route for an authorized firm to be able to sign off and have that additional authorization is as yet unclear, in my view. I do know, for example, a firm that is actually looking for authorization under this specifically, and in their, as I understand, in their business plan, they are making that exact point to the FCA. It is currently unclear, but I think it's something that potentially us as peers can need to get together on, have discussions with the FCA on, because you're absolutely right. I don't think it's quite clear at the moment, and what the FCA, I suspect, probably will need to do is give that authorization to a certain number of firms and then publish them, because we just don't know who they are. And ultimately, firms are going to get stuck and not be able to comply, or not be able to have that authorized firm sign off on their promotions without that clarity. So apologies, I don't have a great answer, but I think my
it
answer
would be helpful
great.
for them to actually give some guidance to firms of how to apply appropriately,
Yes.
as they have done in terms of the guidance of how a firm could get onto the register. But I'd be very happy to support that sort of contingent that has a conversation with the FCA. And I know Danos are members of APCC, so maybe that's where we could gather together to ask those questions collectively.
Appreciate that. Thank you so much, Richard. Yeah, we've got loads of questions now starting to come through the chat. So, Shelley, you've got something to add? Please go for it.
Yeah, just a quick addition there is that in crypto, obviously, we're used to operating without clarity on or with the unintended consequences of stuff that hasn't been thought out. So the only thing that we can do is to make sure that we're documenting really tightly what it is we're doing in the context of financial promotions looks, feels, smells like a TradFi financial promotion, and that we note in our documentation that in the absence of guidance, we are following the principles that are followed in TradFi, and this is our best effort. And whilst that may not provide a defence, I would be shocked to see it leading to a harsher penalty or outcome for anyone. And it's just about being a grown-up and assuming some responsibility and knowing with some context what it is that would be permitted in other environments.
Thank you so much for that, Shelley. Some great more insights there. We've had another one come through in the chat from Mane. How will MiCA affect cross-border activities across the firms who operate in and outside of the specified region? Sinchan, would you like to take this one?
Yeah, happy to share some thoughts and bring others in. I think the way MiCA is designed, it's designed to be harmonized and consistent across the region, across the European Economic Area. So clearly think of that as quote unquote passporting rules effectively. So once you are registered and authorized in a particular country within the bloc, you're able to operate your services other countries within the bloc. So that's inside. And I think that concept is very familiar to most, if not all of us in the call today. I think when you start to go outside, so that's an outside in view. So you might be making this up in an Asian country, and you want to offer your services to clients who are based in the bloc in the European Economic Area. You will still be within the scope of MiCA, and then you need to look at your product services client base to say which product services am I offering to the European Economic Area clients, and then map it to the activities, map it to the rules that come within MiCA for those particular activities, and be compliant around that as well. So there is a cross-border nature that firms will need to consider, but hopefully that won't be too disfamiliar compared to some of the other cross-border rules that we have seen coming out from the bloc in the recent past. So hopefully that gives a flavor to the team.
Perfect. And yeah, more and more questions coming through. Looks like we've got quite a few around kind of MiCA, and we'll come back to that in a second. Another question we've had posted here, perhaps maybe this one to Shelley, but again, I'll let the speakers perhaps decide between them. But this one says, the Guardian newspaper published yesterday that the National Audit Office is conducting a review into the effectiveness of the FCA with plans to assess the regulation in light of its growing list of responsibilities, including crypto assets, AI, and competitiveness. What do the speakers anticipate to come from the review? Any suggestions on that, speakers? Shelley, perhaps? Yeah? Go for it.
Yeah, this isn't going to be an easy one to answer. I mean, what it'll see from the review is that the priorities being placed upon the FCA are not a reflection of a risk-based approach to what is happening in the UK and the objectives of the FCA. I would expect that to be the outcome, where the focus is on diversity and inclusion. And the FCA Innovation Day is focused around how great it is. They have gender neutral toilets. That to me is like a distortion of what diversity and inclusion is meant to be for an institution like the FCA. It's less about them. It should be more about the incredible impact they could be having on firms around the UK rather than belly button staring. And the pressure being put on the FCA is also pretty unfair. They're only doing what they've been told, and they're being told to do things like focus on Nigel Farage being a PEP and how inconvenient that is for him and other politicians who have to fill out more forms. And they're actually taking up time in Parliament and time on the FCA agenda to say how terribly distressing and inconvenient it is for PEPs. Who's law in the first place to have to fill out an extra form, and that becomes a top FCA priority? Wow. So yeah, I'm looking forward to this review and hoping it results in a more risk-based, evidence-based approach to what priorities are that are a reflection less of mandarins and more of the public and the institutions the FCA is meant to serve.
Perfect. Thank you so much, Shelley. Another question's come through. I think this one was probably more for Dee. I think it's around the financial promotions piece. The question is, given the short implementation timeframe of financial promotions, alongside other upcoming regulatory requirements like consumer duty and the travel rule, do you think there is a lack of understanding within the government and the FCA about how few resources smaller crypto firms actually have? And I know the question goes on further, but let me just stick to that for now. Dee, can I hand over to you there?
Yeah, absolutely. I'm not sure if it's necessarily that they don't understand how few resources we all have. Although, and I would definitely agree with you that all of these things are coming at the same time. Of course, travel rule is 1st of September. This is the 8th of October. These are huge things. And yeah, most crypto firms are running on very, very tight budgets. I think, though, there is an expectation by the FCA that we basically hire more employees and more staff. And that is unfortunately a harsh reality. And they're not necessarily always aligned with this. I think, unfortunately, with the travel rule, for example, I think that the challenge not only is implementation by 1st of September, but the challenge is implementation by the UK a whole year ahead of the rest of Europe. And those things are, create other challenges and difficulties. And of course, with something like the financial promotion rules, absolutely agree with everything Shelley had said. We need to align ourselves to FinPro or to TradFi in certain ways. But what I find really challenging about this is things like the 24-hour cooling off period. We don't have a mechanism for that right now. These are all additional asks for technology and engineering departments. So it's not just an impact, I think, on the compliance teams, it's also a huge impact on firms themselves. And I do agree with you. I think there is a lack of understanding as to the general impact in terms of engineering asks. The 98-page or 93-page document on it, the policy statement, does actually talk about cost-benefit analysis and estimates from costs, but I think they're out, would be my opinion.
Thank you so much for that, Dee. We've got a couple through on the chat about MiCA. So what steps do firms need to take over the next year to prepare for MiCA? I think Sinchan will pass that back over to you again, if that's all right.
Yeah, happy to share some perspectives. I could probably spend an hour talking about it, but I'll try to do a 60 seconds of that. I think of the two time horizons through 2023 and what's in 24, given some of the consultations and product scope. I think there are a few qubits there. Through this year, I would suggest firms think through their product scope, their client scope, their jurisdiction scope, and make sure that are you being caught by the MiCA regulations when it goes live, given the business activity that you were doing? Start to think about your authorization/registration in the EE area. There's clearly a grandfathering optionality in there. So if firms are already operating in the region, registered, authorized in a certain country, start to think about those things. As you look at your product jurisdiction, have a very clear view on your forward-looking strategy. And the reason I say that is, if you are operating in the asset reference token, or for discussion purposes, let's call them stable coins in a loose concept. If you're operating in that, then you will coming into scope in June 2024. That gives you a compressed timeline, that gives you other things to do. Be very clear on that as well. But I think also importantly, have a view of your near-term strategy. What I mean by that is next 2-3 years. If you're getting into other products, into issuance of tokenized assets or crypto assets, you will be caught in scope through the rest of 24. So have a clear view of that as well, and start to get ready. I think make a choice on your jurisdiction, the regions or countries you want to operate in the EEA. Clearly, there are broader considerations and strategies, such as your tax considerations, such as your talent availability considerations, such as your existing relationship with certain regulators, which might just support some of those transition paths as well. So give some very careful thought around that. And I would also suggest that as you put in the application, exactly to Shelley's point earlier, these are quite exhaustive applications. So make sure you put in the right effort and time and get the support where you need to make sure that you get it right first time, hopefully, is in there. So the number of strategic, operational, and regulatory consideration that firms need to have, but I would say break it down by 2023 and 2024, drive it by your product and strategy and your relationships, and shape from there. Hopefully that helps.
Yeah, definitely. Thank you so much, Sinchan. Yeah, we've lots of as we thought we would, lots of questions around MiCA and the understanding of it, and how firms need to prepare for that. So really appreciate those further thoughts, Sinchan. We did have the questions in the chat, but we did also have some questions sent to us beforehand as well to run through. So I'd like to jump to one of them, and this one actually I think will be for Dee, if that's okay. So Dee, can you just give us some examples of where AML controls and crypto have had a real world impact?
Yeah, sure. World impact, ultimately, I will interpret it as impact from a prevention of financial crime, right? Ultimately, if we look at it that way. So I think the primary difference with crypto compared to traditional finance and being able to have an impact in this regard in terms of controls is the use of blockchain analytics in transaction monitoring. Where previously in traditional finance, obviously we'd have to troll through lots of data in order to form a suspicion, and maybe there are some red flags and maybe there's some anomalous behaviors, etc. Blockchain analytics allows crypto firms to really identify potentially suspicious trends quite quickly, and also to investigate on that basis. In terms of real world impact, I personally believe that I was more impactful in my time in Coinbase in terms of speaking to authorities, both the police and the NCA, etc., and actually providing useful information in order to, first of all, investigate and potentially convict criminals than I ever was in traditional finance. Now, of course, I was in an institutional bank, so I'll say that with a caveat, obviously very, very different type of customer. But what I will say is that when I was at Coinbase, and certainly I hope to do so the same at Bitpanda, the global intelligence team was a fantastic team of highly trained professionals, trained in investigations, in many cases, and the majority of cases actually former police officers that interacted directly with law enforcement authorities, looked at suspicious activity, was able to provide useful information in relation to sends to suspected terrorist financing addresses, to suspected vendors of child sexual abuse material, of illegal drugs, etc. And in that case, I do think that the world, we are having a real world impact on submitting useful information to the authorities that they are then using to investigate individuals and ultimately stop that behavior and that illicit behavior. I think particularly when having conversations with law enforcement and the National Crime Agency in the UK, they are interested in receiving this sort of data. Yes, it's a lot of data. and it's far more than they usually are expecting and get sometimes in traditional finance. But the usefulness of information in terms of sends to suspected vendors of things like child sexual abuse material is just massive. And think of the impact of that compared to things that ultimately we cannot track. So I think, yeah, blockchain analytics would be where I basically see most of the usefulness in terms of real world impact. I hope that helps, but happy to talk to anyone at length about this.
Definitely. Thank you so much, Dee. Shelley, are you with us, Shelley? I don't know if you're having some technical issues. I did have one question I was going to aim your way.
Back with you. Yeah.
Back with us, cool. So another kind of question we had in beforehand was, so Shelley, parliamentarians have been in the news lately urging the FCA to focus on how difficult it is being a PEP, politically exposed person. What do you think about the due diligence steps?
Okay, so I've given my view is that something that impacts the few, not the many, on a risk-based approach should not be given the shelf space it's being given at the moment. But in the context of what does the evidence show us about PEPs? It shows us that they are high risk. You know, out of that handful of PEPs that we have in the UK, the numbers are roughly around 1,000 with a multiple of 5 times that as PEPs by association. But the really easy thing is if you don't want to be a PEP, just resign your public office and in 12 months you're no longer a PEP. So problem solved from the perspective. And in terms of the due diligence, my personal view is we should be ramping it up for PEPs, not winding it down on a risk-based approach. So, you know, with the sort of Nigel Farage protest, it's like the lady doth protest too much. What is it about filling in a form that's so annoying for him? It's what the rest of us have to do. These are the laws of the land we live by and seek to uphold and be role models in our community. So it feels a bit strange when being asked how many mortgages you've got. That was another question that was seen as being too intrusive. That was documented in Hansard by a lady who was speaking in the House of Lords about how dreadful it was for her to have to disclose how many mortgages she had and how many necklaces she wears. Well, that source of funds, source of wealth, it applies to everyone. And if our civil leadership is not able to understand why we're asking these questions, then I think we need to be asking more questions, because maybe there's other fundamental stuff about the great privilege that comes with great responsibility that they may not have got the right end of the stick on. So I would just say increase the scrutiny. Of course I would.
That's brilliant. Thank you, Shelley. And for our final question today, it's going to be aimed towards you again, Sunchan. So what are the pragmatic steps that firms can consider to innovate in digital assets?
Yeah, absolutely. Happy to share some perspectives. Again, a fairly broad topic, I suppose, but I'll try to keep this short in the interest of time. I think the first and foremost is having a very clear digital asset strategy. What I mean by that is be very clear on the product, on your customers, on your jurisdictions, and why do you see that product customer fit coming in, basically. So put in other words, look for a problem to solve, not the other way around, effectively, around that. And as you build a strategy, I would also suggest having a very clear business case backing that strategy as well, backed by robust financial modeling and calculations, because frankly, all that will help in your ultimate registration authorization journey as well. So they are fundamentally based to your business. The other thing I would also suggest is having a very clear risk appetite that's transparent and agreed to your senior leadership, whether it's your board or exco. Be very clear on those topics as well, and make sure that business operates within those guardrails that has been designed as well. On the execution side, I think it's very important to explore partnerships. As I said right at the start, I think the collaboration between TradFi and NewFi crypto natives is extremely important to drive innovation in this ecosystem. So rather than doing things in digital islands, I often talk about partnerships to drive collaboration. And that can take a number of shapes and sizes. It can drive collaboration on a particular use case. It can be around buy versus build strategy. There are a number of optionalities embedded in there, but bear an open mind and explore those options, I would suggest as well. I think be very clear and invest in the talent. I think the 3 lines of defense that we're all used to seeing in the traditional market is extremely important to run a fit and proper business in the digital assets ecosystem. So invest in those risk controls, policies, procedures, invest in talent, I would say that as well. And finally, and very, very importantly, be very clear on the authorization and registration requirements that you need to follow, because that feels like an AML CTA, but the point that Dee was mentioning, I agree with it completely. It's the cushions are deep embedded in your business around it. So having that strategy, operations, the risks and guardrails around it being very clear, having a proper management structure, having fit and proper business will eventually all help the journey and hopefully help the business be very successful in the market. So that's sort of some of my headline perspectives, I would say, for firms to consider.
That was brilliant. Thank you so much for all of your insights there. So that concludes today's webinar. Thank you so much for everyone for coming. Really hope that you enjoyed this and found it to be really informal and insightful. I'm so sorry if we did happen to miss any of your questions. If you do have anything that you want to be addressed by any one of our 3 speakers, please feel free to drop that over to myself or Bradley in a message, and we can share that with them and get that back to you. Have a great day, everyone, and we hope to see you soon.
Thanks so much. Thanks, everyone.
Thank you all.
Thank you very much, everybody. Thank you.
Thank you. Bye.
There you go.